is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live this Tuesday morning from the CNBC TV 18 Motilal Oswal studios. I am Prashant. With me, as always, my colleagues Sonia and Nigel. Morning, guys.
Morning.
Hi, good morning. Anyone watch the match last night?
Couldn't stay up, missed it. Saw the first part of it and I saw the last 2-3 deliveries. So I saw the win, but it was a cracker.
It was. I saw the highlights on social media and all of that. I couldn't really catch the match. By
And the
virtue
way it
of
was,
coming early this morning
and
here.
the point is that the way it was pouring, I saw till the time that it was raining, and the way it started pouring, the winds and the rain, and I thought, well, it's a goner. I mean, I don't think they'll play this out in the night. And this morning I woke up and there were, hundreds of messages on WhatsApp groups, cricket groups, and just quite amazing, befitting for a final, right?
I think there was that one image, right, of Dhoni and Jadeja. There was that image which is, I think it's gone viral, and it's... it's great. Chennai's win was great, and all of those moments just capturing the energy of the IPL, it's stunning.
And it appears we have one more season of MS Dhoni. It appears so.
Yeah. That was, I think, the highlight.
The highlight,
That's left open-ended.
People were waiting with bated breath, and he did not disappoint. He said, well, this is a gift from me to the fans for the love that they've shown me. And maybe
in batting performance, he disappointed yesterday, but otherwise he's not.
Yes, Nigel. That's MS Dhoni.
First ball
At the end of the day, it's his 5th IPL title, right?
Yeah.
That's spectacular. Okay, but we're going to keep talking about the IPL, but lots to talk about the market as well. The markets are not too far behind. We're also at the cusp of a new high.
We are, but US markets were shut, Sonia, right? So I think it's actually, we should have had an IPL discussion with an expert. But, so no real cues from US. Stock markets closed overnight, but S&P E-mini futures are up about a third of 1% or so. But the fact is, there's no follow-up. And we saw this during Asian trade yesterday, during European trade yesterday as well. Futures in the US futures were higher, this much, about a third of 1%, but they were not building on. Now, the text of the U.S. debt ceiling deal, which was agreed between the U.S. administration, the White House and the Republicans, came out yesterday. And, the reading of it by economists, etc., shows that there is a very modest macro impact. Why should there be a modest macro impact? The deal perhaps will get done, as we've been saying for weeks. It needs to be signed into law, and that will perhaps happen tomorrow or day after in the U.S. But what after? Because, there will be an agreement to cap all non-defense spending at a certain level, last year's level, etc. So the government cannot spend more, which perhaps will impact the GDP. And the reading of that impact is that it's going to be pretty modest. So that's something new, which I thought we should point out. Now, the markets here, the rally continued yesterday. And we on the Nifty Bank made a new all-time high. The Nifty is not very far away from a high. Towards the end, towards the close, we saw some profit booking. The Nifty came off about 30-40 points from the highs. The banks actually saw a little bit more in terms of a pullback. In point terms, I think we saw about 170 on point pullback for the Bank Nifty from the high point. Now, where do things stand this morning? On the way up for the Nifty, I think we left off at 18,600. On the way up, the near-term upside level is about 100 points out. That is 18,730 is the near-term upside level that the market perhaps should target. On the way down, the Nifty should not break or rather fall back under the previous high, which was 18,420. There is a 20-day moving average as well, but that is way under. So 18,420 perhaps is your line in the sand under which, I think people will start to get a little nervous. Bank Nifty, for 10 days, it has been knocking at that 44,100 level, right? Full 10 days. And yesterday it broke out of this consolidation, congestion zone, and it was a surge. It broke out with a gap. So very naturally, supports for the Bank Nifty come in that gap area, which is nothing but the low yesterday, the gap between the low yesterday and the high the day before yesterday, which is 44,067 to 44,193. This is the immediate zone of support which the market should hold on to. And as I've been saying, for both the Nifty and the Bank Nifty, the 20-day moving averages, which are a little below, those should be kept as complete trailing stop reversal levels. and hopefully those should not be hit. Maybe we get a bit of a consolidation. The market's done quite a bit. And of course, now we are heading into the US debt actual vote. An agreement has been made, but this needs to go through both the House and the Senate. And if there is a sort of slip between the cup and the lip, I mean, the markets will go into a bit of a tailspin. So, and that perhaps is the reason why US futures did not react in a very exuberant way. Friday's reaction in the US was very strong. Last night was nothing. Last night was a holiday. And today we will see if there is any follow-through in the US as well. That should provide us additional cues. A6 Nifty is absolutely flat, little over 18,700. Sonia.
Oh, absolutely. And the momentum is intact, right? I mean, you can see it in the ticker. You can see it in the way the market is moving. I was speaking to a few market experts yesterday, and they were saying that at this point in time, the Fed is not indicating any rate cuts, right? But at some point towards the end of 2023 or at the start of 2024, rate cuts will come. And the market globally perhaps is starting to price that in, that optimism. When the Fed turns, at that time it may be too late to jump in. So perhaps a lot of, bullish market voices are starting to price that in. So that's one thing. Of course, the market has already gained 2.5% in the last 1 month. So the Nifty has done a lot of the good work. And now we're less than 300 points away from that all-time high. So we're at the cusp of that, 18,888. Yesterday, it was a 5-month high. The Bank Nifty is at a record high as well. And both foreign and domestic investors continue to buy in the market. So one thing which is very strong is liquidity, both from the domestic as well as international fraternity. Yesterday, there was about 1,800 crores of buying by FIIs, and DIs bought almost 900 crores as well. The US markets, although they were shut yesterday, have traded with strength. The government has reached that US debt ceiling deal, so that's the big optimism over there. But for now, all eyes will be on these new highs. And even if we do get there, yes, a little bit of profit taking won't harm anyone. A little bit of consolidation could come about. But I think the trend definitely for the near future is on the upside.
Well, that's right, Sonia. We could be bracing for some near-term consolidation. Yeah. But the trend is still on the upside till, say, the 20 DMA breaks on the downside. And for the Nifty and the Nifty Bank, that's closer around 1.7 to around 2% away from current levels. Yesterday as well, you did see the Nifty end higher, and a couple of large cap stocks did well. Mahindra and Mahindra, Titan, both of them did pretty well. The Nifty Financial Services Index, that plays out the weekly expiry, so that will be a crucial factor to track, particularly in the second half of trade. Now, yesterday we highlighted this marker that the PCR had moved to the upper end of the range. Now, today, just looking at the India VIX, normally they move in an inverse direction. If the Nifty moves up, the VIX cools down. But it appears the IVs on both sides are moving a little higher. Maybe we have a couple of big events that are coming, so that's why they moved up. So that's just something that you should take note on. Sometimes it's a word of caution, but it was up only around 3.5% or thereabouts. What did the FIs do? Well, they added some short positioning, but the shorts are only at around 40%, so they continue to remain net long on the index. On the option side, well, they bought puts. They bought more puts than calls yesterday. The problem is that they're writing calls as well aggressively. So at higher levels, you're likely to see some supply that could come in. Let's pull up two active strikes yesterday, and there appears there's a bit of an option, a strategy that's playing out. It's known as a short straddle. What is it? You write the call as well as put of the same strike. That's the 18,600 call and the 18,600 put. Club the premium. Those that are playing the strategy, they'll pocket closer around 150 to around 160 rupees. And they are hoping that the Nifty will be in this range. So 150 points higher than around 18,600, 150 points lower than around 18,600. So that's where you're getting the broad range on the Nifty itself. They're bracing for next few days that we hold on to this range, and that's why I'm calling for some consolidation on the Nifty. But the Nifty Financial Services Index, that's going to be the crucial factor in the last 60 minutes. Particularly, it's not really played out that way in the last couple of series because it's not moved that much. But on the upside, you're seeing some resistance levels because in 19,600 call, 19,650 call, both of them are very, very active. And plugging in the premium, you have your resistance zone. So we're close to around 0.5% away from those levels. That will be a resistance zone. And the bears are positioned that we don't get past that mark. SGX Nifty suggesting some green to kickstart trade. I think we're in this range of around 300 to around 400 points till we break it. So let's see how this goes.
All right. Nigel, we'll keep an eye. Before we go any further, let's quickly tell you what's lined up here in the first half hour of the show. We get you updates from markets across the globe. Matt Orton of Raymond James Investment will join in to discuss the global setup. Our research team will get you CNBC TV 18's list of top 10 stocks for the day. At 8:30, we do a fundamental stock check with Sanjeev Bhasin of IIFL.
Okay, well, we have a couple of big calls coming in this morning where the markets make opinions, as we know. So a lot of opinions coming through with the markets at the cusp of a new high. First up, we have Rhythm Desai of Morgan Stanley, who says that this India is different from what it was in 2013. In a short span of 10 years, India has gained positions in the world order with significant positive consequences for the macro and market outlook. There is significant skepticism about India, particularly with overseas investors who say that India has not delivered its potential despite it being the second fastest growing economy and amongst the top performing stock markets over the past 25 years. However, such a view ignores the significant changes that have taken place in India, especially since 2014. Morgan Stanley highlights the 10 big changes which are mostly because of India's policy choices and their implications for the economy and the market. These include supply-side policy reforms, formalization of the economy, Real Estate Regulation and Development Act, social transfers to beneficiaries, insolvency and bankruptcy code, flexible inflation targeting, focus on FDI, India's 401k movement, the government support for corporate profits and MNC settlements at multi-year highs. Okay, so lots of positive views coming through now.
And, Sonia, the view is that corporate profits as a share of GDP, because of all of this, will rise. Yeah. That's the interesting bit. Well, let's stick with, the more views. Indranil Sengupta, who's the strategist and economist at CLSA India, has this to say. He says, and I quote, investors need to track 3 macro data points this week. CLSA has raised F5 23 GDP growth forecast to 7.1% from 6.9%. While on the other hand, the bad news is the trade data will continue to show exports are contracting with the global slowdown. This supports their call of F524 growth slowing to 5.5%. He adds that they are at CLSA following the Southern Oscillation Index to see if El Nino is forming, and that has dipped to minus 13.6% on May 27, well below the minus 7 threshold. Although the Met Department is retaining, at least for now, its normal 96% of average rain forecast.
Okay, that's an equity and a macro view for you. On the rupee, it's still trading around that 82.54 to the dollar mark, so very close to around 83. Let's get you some views for the day. Abhishek Goenka of IFA Global says we are in the middle of an unprecedented low carry, low volatility environment in the dollar rupee. The RBI wants to keep the monetary policy conducive to domestic growth inflation dynamics rather than follow the US Fed. This has resulted in narrowing of interest rate differentials, which can give rise to forex volatility. The RBI's endeavour seems to be to use the reserve buffer to manage currency volatility. He adds that the RBI has accumulated reserves around 81.60, and now we can see the central bank use reserves to defend the 82.90 mark. Given supportive current and capital account dynamics, Abhishek expects the rupee to trade in a range of 81.60 to 82.90 over the coming few weeks.
On bonds, Ajay Magnolia of JM Financial says that fearing another rate hike in June meeting, supported by the macro data print, uncertainty is driving the market and not allowing it to rally. The rise in global bond yields are having some spillover effects on Indian bond yields, which are trading in the upper band of the narrow range. Cutoff on SDL supplies is likely to be a bit higher as compared to last week. In the absence of any major triggers for the market, they expect yields to react to the movement in global bond yields. For the Indian 10-year benchmark, Ajay sees 6.99 to 7.04% as the range for the day.
Well, we have a lot of stock-specific action that we're tracking for you. It's the final day of earnings, so plenty of earnings coming through, and we'll get to that in just a bit in our special Top 10 segment. But let's run you through the list. We'll look at NHPC, Heikel, Shobha, ISGC, Heavy Engineering. They are stocks on the back of positive news flow, while we have more stocks that could be reacting to negative news flow. The list includes Torrent Power, RVNL, IRCTC, Campus Activewear, Jubilant Pharma, and Heidelberg Cement as well.